All right, good morning. It is 8:17 a.m. Central Time on Friday, August 18th, 2023. And since we are short on time, let's jump right into the trade planning exercise for today. Now, with the current context, our short-term bias is bearish, our intermediate term is neutral bearish. We know that sellers are overall in control, but at the same time, the markets are overextended and exhausted and oversold, and that creates a situation where responsive buyers can still be active at the support zones for at least intraday bounces. Now, I think today is going to require a close read of the intraday momentum situation because this recent breakdown and downtrend is, in my opinion, primarily fueled by long liquidation. And the thing with long liquidation is that longs who are liquidating are not price sensitive. They just want to get out. So it doesn't matter if the market is hitting support or if ES is oversold. If a buyer who is looking to get out of their position just wants out, they may not care what the price is. Their goal simply might be to exit the position, reduce the exposure, and reduce their overall risk. So we need to be mindful of that, and that is where we're going to have to be reading the intraday momentum a bit more closely. So even though long setups can work out, even in this bearish environment, I think it will require more skill and expertise when it comes to execution and trade management. So we are going to play defense on the long side today, and the short setups will likely be easier as long as the market is not heading higher on any significant upside momentum. Now, when it comes to shorting this type of market, it still requires a certain level of selectivity and caution because, from a trade location perspective, initiating new shorts at these lower areas of resistance, it's simply not good trade location. And just a short covering bounce or a short term short covering rally can drive the market back up into yesterday's low and even the overnight high. So, from a trade location perspective, the pre-market resistance zone and even the initial resistance zone is not necessarily what I would consider good trade location. It's good enough as long as the intraday situation continues to be bearish and the momentum is not really there on the upside. So we are going to set up a short at the initial resistance zone, 95.5 to 88.5, and we want the entry to be below the overnight high. And on the downside, if ES fails at initial resistance, then there would be potential to return back down towards the initial support zone. But if the market is heading higher on some decent momentum, or if we stabilize, let's say, above yesterday's low, then we could eventually end up testing the better areas of resistance, which are a bit higher at 44.06 to 14 and 17 to 23, and then the 26.75 to 36.75 is much less likely to be tested. That would require a much wider range. It is a range extreme, so it's low odds that we'll go all the way back up there, but 44.06 to 14 does have potential to get tested. That marks yesterday's intraday balance breakdown area, so a move back into it would simply be a breakdown retest, and the expectation would be for sellers to be active there on first test. So 44.06 to 14, we can likely short simply because of good trade location and the directional bias being in our favor. The initial resistance zone we can likely short for simply the bias being in our favor. Trade location is not amazing, but the bias is in our favor, so we can certainly consider shorting initial resistance. Pre-market resistance is going to call for a little bit more caution because the only time that the trade setup really works out from pre-market resistance is if the trend down that has been in play for the last several days continues and we end up taking out initial support, or at least testing initial support. So The issue at pre-market resistance at 73.25 to 83.25 is not necessarily that the zone is going to give way immediately on first test. I think even over there we'll get a response, but we have to be mindful of the targets. So in this situation, the high probability target would be initial support, and the final target, let's assume that initial support holds. Let's see what that looks like. What entry we can get based on that. And the previous close is 84.5, so I am going to want my stop to be beyond the previous close. So in this situation, I'm going to be using a stop that's actually a couple of points beyond the zone, just to account for the gap fill. And the entry price on this particular setup, that is subject to change, and I think it is going to require a real-time market read. So pre-market resistance, I may short, I may not short, or I might try to get a better price. I may need to be more aggressive. So I think pre-market resistance is going to require the most discretion in the moment. But 79, just a move down to 55, gives us 3R, so that would be a good price. And if the market really sells off and let's say we end up expanding the range into the 34 high volume node, into 38 half zone, then we can probably get closer to 4R out of this trade, even from the pre-market resistance zone. So 79, would be a decent enough price to short. Initial resistance, like I mentioned earlier, it's still technically an aggressive trade location, or at least it's not ideal trade location, but bias is in our favor, so we can certainly take a stab on the short side over there. And in this case, all the market has to do is reject, come back down into initial support, and we can get 3R. One thing I'm going to change here is I'm going to target yesterday's low of 78.5 as the high probability. So I'm going to set this to actually 79 and see what price I get. So that's going to be right near the overnight high area. So we'll make that 90 and 78.75, make this 55. So, the final target in this situation may need to be adjusted. Even the high probability may need to be adjusted in the moment. But the good thing is that, even if we get just a response down to yesterday's low, which should be relatively easy to do, it's not terrible. There's still 1.5 R of potential edge, at least off that area, so not too bad. And if the market rejects and fails here and then starts selling off below yesterday's low in a more significant way, then maybe we target the overnight low or maybe even lower. Now the key at initial resistance is going to be, does the market take out the overnight high? Because if ES takes out the overnight high, then the likelihood of the market breaking initial support would be lower. Doesn't mean it can't happen, but the probability at that point of the low of day being above the overnight low would be roughly 73% or so. So, there's still a 27% chance that we could break the overnight low, but again, it's low odds, or at least not high odds. So that's where we're going to have to see, okay, do we break above the overnight high and then sellers step in, or do we hold the overnight high? And in that situation, we might be able to get more out of this trade. So that we'll have to determine in the moment. Looking at the next zone, 06 to 14, that is a much better area of resistance. Same goes for 17 to 23. I think if we hit 06 to 14, again, there would be potential to go back down into the low from yesterday. So in that situation, we would want to definitely scale out above initial resistance, but then our high probability target can be yesterday's low or somewhere near yesterday's low, and the final target may end up being even below yesterday's low. Let's see what it looks like if we just target the 79 area, and if we just look for something like that, or let's just see what that looks like first. So 07 quarter, gives us 3R into just a move down into yesterday's RTH low. In this situation, I think it's okay to jump in a little bit closer to the front of the zone. So we'll just make it 06. And if the market ends up going even lower, let's say, then we can get more out of it. So pretty good spot to short first time up. And, again, if the market is testing it later in the day, or actually in today's case, testing it later in the day might be a good thing, because I think if we do get an upside move in the morning session, I think in the last hour, the market is likely to sell off. So today, actually, the market heading up into 44.06 to 14 or 17.23 later in the afternoon might not be a bad thing. I think that that would still be a spot where sellers can be active. I don't think that longs want to carry their position into the weekend, and that can result in a late afternoon sell-off or correction. So given that our bias is bearish, I think even in the afternoon, if the market does end up managing to go back up there, which it may not even do, then we can certainly consider shorting. We're going to leave this as is. That looks fine. And again, the probability of reaching yesterday's high is quite low, so we won't concern ourselves with that. Now, on the long side, as I mentioned, bounces on first test of support are still likely, but I think we're just going to have to be much more defensive with how we play the long side. We have to read the momentum. We have to make sure that we are allowing any short-term liquidation to take place and let the momentum flush out, and then perhaps we can find a good long. As an example, the 43.46 to 55, the initial support today, on first test of that zone, we still got an intraday bounce that would have given us a scale. And as soon as that first scale target hits, our risk gets reduced by 50%. So as long as we can get that scale out, that's going to be the key here. If we can get that scale out, then it's going to be much easier to manage the trade. We've already cut our risk by half. So today I think we're going to have to be just much more careful. The long that would be interesting would be if we got a move down into 43.0675 to 15 quarter, or perhaps even 19 to 22. I think that these are areas where there is a higher probability of an intraday bounce, and all we would need is a move back up into the broken initial support to get 3R out of it, right? So what I'm going to do is daisy chain this one. So you can see all we need is a move back to 46 to get 3R from 12.5. Let's see what it looks like if we just put our stop at 12 quarter on this one. So 20 entry, and all we need is a move to 46 to 55, even if we just get to 46, 2.7. So the risk reward is quite good at 19 to 22, 0675 to 15 quarters. So those are the areas where we will consider taking a long setup. The long at initial support triggered in the pre-market session, scale target easily hit, risk already cut in half. So, this was a decent spot to take a long as well, because we can easily fill the gap, and that alone would give us around 2 to 2.5R. And if we end up going to the overnight high, then of course we can get 3R. All right, guys, that is going to be a wrap. It is 8:31 a.m. Central Time, so the market just opened. Thanks for watching. If you found this video to be valuable, then please do like it and share it with other traders, and I will catch you on the next one. Good luck and good trading today.